Welcome. Right here on this strategy, we need to have a perspective into what we are going to be expecting in insight to get the best trade opportunities. So for a sell pattern, what are we going to be expecting? By the market open, the first 4 hours, we are going to be expecting a contraction phase. We are going to be expecting to see a range bound market of price contracting. Then during the Asian session, London session overlap, we are going to be expecting to see a break of this structure to the upside, and on top of this structure we are going to expect to see an evening star that breaks this structure down. Then you take your entry at the top to give you the best risk to reward and less risk on the trade. Likewise, if it is a buy pattern, you are going to be expecting an accumulation, a range bound market during the first 4 hours of the Asian session. We are going to be expecting an accumulation during the first hour of the Asian session, first 4 hours. Then during the Asian London overlap, we are going to expect this structure to be broken to the downside, and at the bottom we are going to expect a morning star and price shoots up. So we are going to be taking our entry at the bottom. This system allows you to catch the top and the bottom of the trend, and as well you could have a range bound market and this pattern could appear in the middle. However, the pattern that occurs at the bottom and the top have stronger signals than the others. However, it is left for you to design your rules in accordance to how you feel comfortable trading the market. So now let us get to the chart to have an insight into how this works, and we are going to have as many examples as possible so as to be able to spot the pattern, sharpen our skills, and hone our trading methodology. This is an aggressive trading style. It can be used to turn $100 account into $1 million depending on how good you are with risk management and how good you are with your technical prowess. Yeah, welcome to the chart. This is a very powerful trading tool, and all we require is a plain chart. This trading tool has been employed by traders for hundreds of years, and we are not just going to be using this trading tool, but we are going to be incorporating it with the liquidity trading style, as the liquidity trading style is employed by institutional traders, it is employed by the big banks and the market makers. Doing this allows us to have an aggressive entry, and it also allows us to make aggressive profits on each trade, because in the market there's always a time to be aggressive and there's always a time to be defensive. So once you see your strategy play out, think of nothing, be aggressive on the trade and make aggressive profits to make a big buck in your bank account. So now we are going to look out for as many examples as we can look out for. However, what is the evening star and what is the morning star pattern? Here, to explain the evening star is a candlestick formation. We need to identify an uptrend, and when we identify an uptrend, we are going to see a bullish candle like this bullish candle right here. Seeing this bullish candle signifies that market is probably still buying up, and after seeing this bullish candle, the next candle that follows is a bearish candle in form of a doji or a hammer, and this signifies that there is a power shift from the buyers to the sellers. However, to confirm this power shift, we need another candle that breaks down and breaks the low of this bullish candle. So to confirm a picture perfect evening star, it has to break the low of this bullish candle. Then we can say that the power is shifting to the bears. So this is the picture textbook perfect evening star we are going to be looking out for. And once we see this at the zones we are looking out for, then we can take our entry. However, this we are seeing right here is a perfect example, although there is no retest. What do we see? The first 4 hours of the Asian session, we can see a range bound market. Let us mark the range. You can see a clear range bound market. And what do we see during the London session? During the London session, we can see this bullish candle confirming this range and inducing more buyers to take position, because right here we have a liquidity zone. Before this bullish candle, the high here is the high of the day, so we can see a liquidity grab inducing more buyers to take position. And then what do we see next? We see the bears taking control and market shift against these buyers. So what happens in this pattern? Let me explain the psychology. Right here at the low of the day, the buyers in this Asian session, they set their stop loss in the low of the day. This is where their stop loss is, and the market maker knows that's where the retail traders set their stop loss. Then they believe the market will buy further. Then what happens? Market reverses against them, hits their stop loss and draws down. So now the bears have shift momentum and the bears are going to milk the market. So typically for the evening star, this is what we are going to look out for. And once we see this, then you can set your stop loss to around 12 pips or 15 pips, but nothing more than 15 pips. Then you can target 1 to 5, maybe 75 pips. Or if your stop loss is 12 pips, then 1 to 5, probably maybe 60 pips. Target nothing less than 1 to 5, but target as much risk to reward as you wish. However, for me, I target nothing less than 1 to 10 in each of my trades. So it is left for you to design your trading style according to your taste. So let us look out for examples and how it has played out on the chart. We have done an example of the evening star, which is the bearish version, while the morning star is just the bullish version. They are the same thing, but you just inverse them to have a clear view of what they mean. So now we are going to try to take as much examples as we can. You can see this right here. This is not a textbook perfect evening star. We ignore this kind of patterns, but some of you are stubborn. You look for every reason to trade, and you can be falling for such pattern. As professional traders, as institutional traders, we are going to rather die than chase the market. So all you need to wait for is for the stars to align, and once they align, you take your entries and milk the market. So right here is another evening star, and what do we see? So have a closer look. You can see that when the market opens, you can see through the London session, the market is in a range. The market is in a range. Let me put the range in a box. Then what happens next? Then what happens next? You can see the buyers in this zone. This is where they put their stop loss. So before you take any trade, you need to have an idea of where the people that you want to take their money, where did they set their stop loss. You need to have an idea, so you would know where you want to zap money away from them. So you can see they buy more. This is an inducement. This is a liquidity zone. The liquidity zone is broken and we have an inducement. Then power shifts to the bears, to the sellers. You can see this is a classic picture perfect example of the evening star. Then you enter right here on the retest after probably setting your stop loss around 15 pips. Then you can see price drops down. So it is that simple. All you need to do is wait, be patient for your strategies to align, then you milk the market accordingly. Patience is a virtue, and in the market this is not farther from the truth. We need to look out for more examples to sharpen our eyes. So right here we have a variation, and this variation is the morning star. Now in the morning star, it is just an inverse of the evening star. During the open, what do we see here? We can see the market is selling down, and the sellers in this zone, they put their stop loss in the eye of the day, and we still have some sellers that put their stop loss in the eye of the following day. So market does what? Market sells further, grabs liquidity to induce more sellers, and what happens? The power shifts to the bulls. Those are the buyers, and you can see this is a classic example. This is a classic example of the morning star, then a retest and price goes up. So that is just how the game is played. The moment you understand the game, you have no reason to panic. There's nothing to panic about. Forex trading is easy, it is a cakewalk. Right here, what do we see? We have a range bound market, and let us understand the psychology. Any strategy you are trading, you cannot explain, you don't know why it is happening, then I don't know why I'm going to be involved in what I don't understand. Right here you can see the market is buying, and the buyers in this zone, they have their stop loss at the low of the day. Then what happens during the late London market? Buys further up. This is an inducement, breaking liquidity. Right here we have the eye of the day. Before this bullish structure, this was the eye of the day here. Then market buys further up to induce more buyers. Then what do you see? You can see the power shifting to the sellers. Then this breaks this bullish candle to give us a classic picture perfect example, then a retest and market drops. So you can see as market drops, it stops out the buyers in this zone. So the buyers in this zone, the sellers here took away their money. So do your due diligence, practice on your own, train your eyes to spot the pattern, refine it to your taste, and I assure you, you are going to become the profitable trader you desire to become. Right here, what do we see? You can see during the Asian session, the market was printing out sell patterns to deceive sellers, because before buyers make money, they will deceive sellers. Before sellers make money, they will deceive buyers. So once you understand the liquidity trading style, you wouldn't fall for any tricks. No matter the tricks the market plays on you, you have no reason to fall, because the tricks of the market are your tricks as well. So you can see the eye of this day is grabbed. You can see a spike of this eye. You can see the spike. Once it is grabbed, the market, this liquidity grab right here induces more buyers to take buy position. The market reverses against them, and sells, and a retest, and the market drops further. So this is a classic example playing out, classic example of the evening star playing out. So this is a powerful day trading strategy. You can incorporate it into your methodology, refine it to your taste, and milk the market. We are still going to have as many examples as possible right here. can see another evening star. What happens here? You can see the market is in a range all through the Asian session. You can see buyers in this zone. So the buyers in this zone, this is where they put their stop loss. We will have some stubborn buyers that use no stop loss. The market grabs liquidity, induces more buyers, and the power shifts to the sellers. So you can see this is the evening star right here. The first candle a bullish candle, the second candle a bearish candle, and the third candle a bearish candle that closes below this bullish candle. Then price drops down. Always make your decision at the close of a candle. Be patient. The market is going nowhere and opportunities are endless on the price chart. Let us take more examples to own our skills and sharpen our eyes. There are limitless examples on the chart because this pattern plays out day in, day out. Right here we can see an evening star. After the evening star, a retest and price drops. So the rules must be met. The first rule, you need an accumulation. Before the accumulation, you need a range bound Asian session, which is also the accumulation. Then you have the manipulation, the inducement. Then at the inducement, you need to see your pattern form, and once your pattern form, you take your entry. It is that simple. Don't overcomplicate anything. Let us take this setup here. First, we see a range bound during the Asian session. See a range bound during the Asian session. After the range bound, there are buyers in this zone because the market is inducing buyers. They are not patient. They don't know this is a correction. And what we see a bullish candle, and the next one we see a bearish candle like a bearish doji, another bearish candle that closes below this bullish candle, a retest and price drops. Don't overcomplicate it. It is that simple. So let us take more examples. Here we have another example. The first rule, we need to see a range bound. After seeing a range bound, then we need to see what? Then we need to see a bullish candle, and this is the bullish candle here. Then we see another bearish candle which grabs liquidity. The first is the range bound. The second is to see your pattern. The first candle, the second candle, then the second, either the first or the second candle must grab liquidity. Without liquidity grab, we do not trade. Once it's grabbed liquidity, you see the third candle that completes the pattern, then you enter on the retest. Although it is human nature not to follow rules, but in the market, for every rule you break, the market must punish you. In reality, in the real world, you can break rules and get away with it, but in the forex market, you cannot break rules and get away with it. The market would always punish a trader that breaks rules. That's how the market is designed. So right here, let us take another setup. This is a morning star. We can see a range bound. After seeing a range bound, in the range bound, we see the sellers putting their stop loss at the eye of the day. Then we can see a sell candle here inducing more sellers, and price grabs liquidity to induce more sellers. The bulls shift momentum. You can see buying pressure here. They complete the pattern. It breaks the eye of this bear candle, a retest, then price jumps up. It is that simple. Here we have another example. You can see, you must have seen how much you would have made just simply following these simple rules and not overcomplicating them. You can see The sellers here, they also put their stop loss here. You can see a bearish candle, a bullish candle that grabs liquidity further. You can see shift of power to the buyers, and retest and price continues to move up. Just take more examples. The best way to learn is to look at the master at work. This one is a field setup. So we can see that most workouts, in fact, rarely are you going to have a field setup, because you just, in fact, you would most likely get tired of making money. Right here you can see an evening star, but there is no retest. Once there is no retest, you just leave it and wait for the next opportunity. So the psychology behind this, the buyers of this day, they put their stop loss here. You can see the first 4 hours is range bound, and right here you can see the pattern, then price drops. Just take a few more examples, then we can conclude. Probably we are going to have more tutorials on this, but with this, if you are a serious student of the market, you should already have a strategy that would allow you survive every market condition. Right here we can see a range bound Asian session, and at the top we have our pattern. You can see this bullish candle, that's the first candlestick formation. The second is a bearish candle shifting momentum to the sellers. This is the second candlestick, and this completes the pattern, retest and price drops. It is that simple. This is an evening star. Here we can see a range bound. The buyers in this zone put their stop loss here. Before the pattern, this was the high of the day, and you can see, so you can see price spikes this zone, creates the pattern on the retest and price drops. This is the pattern here. Let me put the pattern in a red box. So that's it. It's that simple. This is an evening star. Trade the morning star, trade the evening star, then you become a superstar in the market. Here you can see a range bound, then the pattern appears here, grabs liquidity on the retest, price drops. So if we are going to take examples, we are going to take examples forever. Do your due diligence on your own. Go and open the chart. Open your chart, keep an eye on the chart, study the chart, look out for these zones, look out for these patterns, watch how they play out, look at the reaction of price, do the needful to watch the tutorial on liquidity and trap zones. However, this is a day trading strategy. It is perfectly designed for day traders, and we are also going to be releasing the tutorial for scalpers, but these are for day traders that open and close their trades in a day. So plan your trades, trade your plan, and most importantly, manage your risk.